In this week's analysis, we'll take a look at a few charts to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. So over the weekend, I put together a free PDF on how to trade a selected number of chart patterns. So my top 3 most preferred chart patterns, I made a PDF to help you understand how I trade them. If you're interested in that, use the link in the description below. It's totally free. I think you're going to learn a few things from that. So without further ado, we're starting with the gold chart on the 1 hour time frame. So last week we talked about a possibility of price bouncing off our moving average on the 4 hours time frame, right? And we seem to be trading above this moving average at the moment. So remember 200 EMA, 200 SMA, with current, price action indicating that we've had a breakout from this descending channel. So going back to the 1 hour time frame, so this can be clearly visible. I'm just going to disable our moving average for now. We had a good breakout, so not with heavy volume though, but I think we've been stalling around this area of value because this is indeed an area of resistance. So an area of previously known support, so over here, now attempting to turn into an area of resistance over here. I think that's the reason why we haven't seen an explosive price movement to the upside, aiming for this area of resistance first TP, and if we take that out, we may aim for all-time highs around this double top. So right now, to go long, analysis still remains the same for a bullish case scenario. So we're going to talk about the bullish case scenario and a bearish case scenario. So for the bullish case scenario, we're going to have to watch out for some bullish momentum. So a bullish breakout from this area of resistance. This will give us our confirmation to go long, right? So if we get a good bullish candle close above this area of value, maybe above this high or this one over here, for example, this would be my confirmation to go long. My stop loss will be placed underneath the consolidation leads to the breakout, and my first take profit target is going to be obviously around this area of resistance. Second one around this price level, so I'm probably going to open more positions if we take out this area of resistance, right? So this is my bullish case scenario, and this is just going to be in line with a breakout from this downtrend, so sloping bearish channel, which coincides with the bounce off of the moving average on the 4 hours time frame, right? So this is going to be my bullish case scenario, and for my bearish case scenario, I'll show you something interesting right now. So mind you, we seem to be having some sort of structural shift as a result of this massive dump we had over here. But if you zoom out and following our moving average on the 4 hours time frame, this bullish trend is still somewhat intact, right? Assuming we don't fall below the moving averages on the 4 hours time frame. So another reason why that moving average on 4 hours time frame is also valid is because you can see area of resistance over here, turn support here at this bounce, right, which coincides with a bounce off of the 400 of the moving average on the 4 hours time frame. So for a bearish case scenario, I'm going to be watching out for a move like this, right? So I'm going to pick up this trend line, cutting across these lows. So if you take a look at this gives us some sort of a an ascending triangle, right? So higher lows, resistance level. So if we get a move to the downside, let's say consolidate here, move up, then finally a good breakout to the downside, this may just be a confirmation to go short, right? If this happens, I'm going to go short. No brainer in my opinion. It's all about probability, risk tolerance, risk management. So if you trading with good risk, then this could be another opportunity to go short. So what this would simply mean, a possible continuation of the bullish momentum, bearish momentum we've seen since we had this double top, right? So two good case study. One, following the bounce off of the moving averages on the 4 hours time frame, followed by a break of this area of resistance, would give us our confirmation to go long. I opened some positions around these lows, but got stopped out because of Fed's interest rate cut last week. So market didn't react as expected. So right now, we're waiting for a more clearly defined breakout right above this area of resistance for me to go long, and that's exactly what I explained a few minutes ago. So when that happens, I'm going to go long no matter what. Good stop loss, good risk management. But if that doesn't happen and we do get a breakout from this area of value, so from this chart pattern, excuse me, this ascending channel, ascending triangle, excuse me. So I'm going to go short, right? So you're going to see all these, a few of these in the PDF I made. It's going to help you understand why and how to trade this stuff, right? So that's briefly for gold. And if you take away this trend line, or this channel, excuse me, you're going to notice some sort of a bearish continuation, right? If this chart pattern breaks to the downside. So similar to what we had over here, you can see a good consolidation, right? Higher lows, area of resistance, we had a break to the downside, bam, nice move to the downside, right? So same thing is happening here again. If this consolidates, gives us a good breakout from this area of value, this trend line, then that could signal a potential continuation in this bearish move, in which we are going to further analyze the market next week, see what's going on and how to take advantage of that price action. But for now, we're still safe somehow, right? Considering the fact that we've broken out from this channel, bounced over the moving average in 4 hours time frame, and if we take out this trend line, right, with good volume candle like this one over here, or something like this, then that could be a confirmation of a bearish continuation to go short. But if we take out this area of resistance, that could be a confirmation of a bullish momentum to the upside in continuation of the bullish trend. So that's how I'm trading. Good right now. If you love the content, please like. If you have questions, leave them in the comment section down below. Moving on, we're talking about crude oil. So this is a crude oil chart real quick. Very interesting chart over here. So we're seeing a massive bearish trend, right? On crude oil, if you zoom out, you can see lower highs, lower lows. I think I use this chart in the PDF as well. Now, what you notice is we seem to be consolidating around this area of value. So we had a good consolidation, good base, and we had this chart pattern, right? A descending triangle. It would have been nice if it would have been perfect if we get a move to this area of value, consolidate a little, and then get a bearish breakout. So this is going to be my bearish case scenario though. But before that, let's talk about what we can see on charts, which is obviously a bullish case scenario, right? So when the market opens, I think I'm going to go long. The reason is because we've had this consolidation over here. We had a good volume candle breakout from this sloping trend line, so the descending triangle, right? I know this somehow goes against the trend, but I'm going to do this because I'm aiming for a quick profit. So I'm not expecting price to go all the way to this area of resistance, right? So I just want 150 to 200 pips because I'll be in with good size, and that will mean approximately take profit of 150 to 200 pips as the case may be. Then a stop loss of approximately, let's see, stop loss of approximately 100 pips or 70 pips, depending on how tight you want to trade this. So this is a good opportunity to go long, but this will be trading against the trend, right? So if you're doing this, very low risk, clearly defend area of stop loss, right, where to exit the trade from, and your take profit shouldn't exceed these highs over here, right? So that's for the bullish case scenario because it's quite set up nicely, broken out, consolidating around area of value. So what I'll be watching for more confirmation will just be more consolidation, for example, right, followed by a good breakout again to the upside. So this will be more confirmation to go long, and I'm going to take the opportunity because we've had this massive run to the upside, dump into this area of value, which created this base, and now this could be a potential continuation of this move, right? So that's it briefly for the bullish case scenario on crude oil. So for a bearish case scenario, that will mean a total reversal from this price level. So we're also going to take out this trend line, and if we do get a rejection, right, we get a rejection like this, maybe price coming down here, consolidate a little, then this could give us a nice opportunity to go short. So this would be the best trade opportunity in my opinion. If we do get a reversal followed by a bearish breakout to the downside, this would be the best trade opportunity in my opinion, right? Because it's just going to be in line with the trend, breakout of support, clear price level to enter the trade. So a good breakout here, stop loss will be placed above the consolidation list of the breakout. Your take profit target could be as low as this support level over here. So this is how I'm going to trade crude oil for bullish and bearish case scenario. So right now, when the market opens, I'm going to look for opportunity to go long, but I'll be very patient to see if there's a follow through from the consolidation we have over here. If not, then I'm just going to wait to see if we get a breakout from this area of support, then I'm going to go short. So either way, one of these two is going to play out, right? So it's all about marking out your levels and picking out where you want to go, right? So if you're going long, since long will be against the current trend, if you're going to do that, enter with very minimum risk. I think I'm just going to stay away from the long right now because I think it's more logical to go short because the trend is bearish. So I'll be patient enough to see if we get a move to the downside, take out this area of support, and aim for lower price target, right? If that happens, it's going to be a banger. It's going to be a clean, sweet trade. But if you want to go long, following the current price action, so something like this, then you should consider going long with a very, very small positions because price could reverse at any point in continuation of the bearish trend. That's a briefing for crude oil. Moving on, we're talking about EUR-USD. So EUR-USD on the 2 hours chart, nice bearish channel. So last week I thought we were going to break out from this channel, and I think I sent the chart to our Discord and on YouTube. So if you follow us, you should have seen that. But following news from the Feds last week, we had the opposite case. So bearish channel. So I think we're going to trade within this channel for a while. So if you're going to go short, my best case scenario to go short will be waiting for a good consolidation. So you may get something like this, like this, like this, like this, like this before you go short. If this happens, there's no guarantee it happens, right? But if it happens, this will be your best case scenario to go short. Consolidation or a descending triangle, symmetric triangle, whatever chart pattern you get, followed by bearish breakouts to indicate or to signal a bearish continuation. If that happens, you can go short here. Stop loss can be placed above the consolidation listed breakout, which will be around here. Take profit target could be as low as a lower bounds of the channel, right? So another thing to watch out for would be this area of support. So we have a very good area of support over here, and guess what? That coincides nicely with the lower bounds of the channel if we get something like this, right? So this will be a very good area to look for opportunities to go long if that happens, right? So this is the bearish case scenario right now. I don't want to talk about the bullish case scenario right now because I don't see any reason why you want to go long on EUR-USD considering the price levels we're currently trading. But for those who still want me to talk about a bullish case scenario, that would be watching out for something like this. So assuming we go down to the lower bounds of this channel quickly this week, so let's say we get something like this, right? Something like this week, we'll come into this place. Then you can look for a consolidation, right? Or a confirmation of a bullish reversal before you go long. So it's going to look something like this, right? So let's say you get something like this. Then you get a breakout from that area of consolidation that marks the low. So that will mean going long here. Stop loss underneath the consolidation that leads to a reversal. Take profit target can be as high as the higher bounds of this channel. But the bullish case right now looks a little messy because we haven't seen how this price action is going to evolve yet. So that's why we're going to be sticking with the bearish case scenario because that's more likely going to happen this week. And the bullish case may happen next week. But you never know, things happen really fast in the market. So to reiterate, bearish case scenario, we're waiting for a consolidation, followed by a bearish breakout to the downside and potential reversal, right? If this happens, then you want to go short when you break out that consolidation. Stop loss above the consolidation leads to the breakout. Take profits around the lower bounds of the channel. So that's briefly for EUR-USD. If you disagree with me, also leave your thoughts in the comment section down below. And once again, this chart pattern over here, consolidation, continuation pattern, is all talked about in the PDF I made. So my chart pattern playbook is what I call it. It's in the description below if you want it, right? So lastly, we'll be talking about the USD-JPY. So USD-JPY chart on the daily time frame looks extremely bullish, but we're currently trading around the area of resistance, so the resistance of this pattern over here. So this is a descending triangle, right? A support level, lower highs. But what's going to happen is, are we going to get a good breakout, right? Are we going to go higher like this, or are we going to get a dump, so a reversal to the downside, coming back down before we eventually go higher? You never know, and do not make assumptions, right? So going on to lower time frame, so 1 hour time frame, for example, to see what's happening over here. So to go long, I would prefer we go down a little, right? At least retesting this area of resistance, followed by a bounce to the upside. If we retest the area of resistance, followed by a bounce to the upside, like a bullish continuation, followed by a breakout again, then that would be my confirmation to go long. So that would be something like this, right? So if we get a proper retest of this area of resistance, followed by a consolidation, a bullish breakout to the upside, then I'm going to go long, probably outside the bigger trend line, or probably inside here to get a tighter stop loss, right? But this will just be a confirmation for me to go long if we get a bounce off of this area of value, right? Now my stop loss can be placed on this price level. It's going to be a tight one, and I trail my positions to go higher because we're going to be somewhat in a price discovery, so short-term macro price discovery, and I'm going to trail my positions to go higher, probably aiming for 500 pips as the case may be. So this is going to be my bullish case scenario for USD JPY. Right now, on a 1 hour chart, I don't think I would be going long even if I see something like this. So even if I see price, going up like this, I don't think this would be enough for me to go long. So some traders would likely go long here, put stop loss on these price levels, but this wouldn't be a strong enough confirmation for me, because we could easily fall back within this this massive consolidation. So for me, it will be coming back down here to get a proper retest, forming a base, right? Giving us a consolidation followed by a breakout to the upside. And this would be a bigger confirmation for me to go long on USD-JPY. And I think this is going to be one of those opportunities where I actually trade currency pairs, right? So if this happens again, entry is going to be around the breakout, stop loss underneath the consolidation is the breakout, and I trade my positions as we go higher. So that's the bullish case scenario for USD-JPY. So as for bearish case scenario, you want to see price trading below this area of resistance and also below this trend line for a better confirmation, right? For a reliable trade setup. So that will be, waiting for price to come here, consolidate maybe around these price levels. Then instead of giving you a bullish breakout or bullish continuation, you get a bearish breakout to the downside, right? So this would be your confirmation to go short. And your entry will be placed after the breakout of this area of value, also this trend line. Stop loss can be placed above the consolidation list of the breakout. Take profit targets can be traded as we go lower. First one can be placed here, second one can be placed here, and third one can be placed all the way at this low. So there's a very good case that this could happen because we have a massive gap over here. So gaps tend to get filled. It takes months, sometimes takes days, takes weeks. So I have no idea what's going to happen, but this is another good case for a bearish case scenario on USD-JPY. So watch out for both. Don't make up your mind that we're going higher yet, because price is still within the range of a bearish reversal, right? At least not until we get a good consolidation over here, followed by a bearish breakout, you go short, or we get a massive retest, consolidation, and a bullish breakout, then you go long if you want to be careful. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning my top 3 chart patterns and how I trade them, use the free, the link in the below to get a book. It's totally free, right? I think it's 20 pages or 15 pages or so. Quick read, free, and I will be sending you follow-up emails to, give you more tips and more trading insights as the weeks, evolves. That's from me, guys, this week. See you next week.